Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Thursday, October 30, 2014. Well, another up day in the S&P today. The Dow was up large, 221, but you need to know that Visa, which was up big today, I forget exactly how much it was up, but Visa was up, accounted for 150 points. Visa was up almost $22. Counted for 150 points of the 221 on the Dow. S&P was up 12. Dow transports were down almost 1%, 83 points. And that was interesting. There was another interesting thing happened today in the middle of the day. In fact, let me show you to you on an intraday chart. So here's what happened. Let me just make this a little narrower. Okay. So all of a sudden, right, about I guess it was right about in here somewhere, right around, somewhere between 12 and 1 o'clock. All of a sudden, the exchanges started having problems. I lost some quotes. There were prints going all over the place as if stuff was trading, $1, $2, $3 away from where it was trading. Any stock, just pick one. There was like a lot of them. The NYSE was having problems. Other exchanges were having problems. I couldn't get option quotes. Nobody can get option quotes. The whole thing was down. And nobody talked about it. It was mentioned once or twice on CNBC, but really nobody cared because the market, as soon as that happened, shot up right here. So nobody cared. If the opposite happened and the market went down, they'd be crying bloody murder. But here, the market, the exchanges had a glitch. And by the way, here's the thing. I don't want to be a conspiracy theorist, but for a second, I'll be a conspiracy theorist. So you're at the end of a month, okay? The market's ripping higher day after day after day, okay? You have exchanges that all have backup systems, all have invested millions and millions of dollars in technology. They have backups for the backups. And you're telling me that all the exchanges had glitch at the same time? It just doesn't make any sense. Who knows what happened? We'll never know what happened. Nobody will ever talk about it again. You'll never hear anything about it. But I'm here to tell you, as soon as that happened, the markets ripped higher. And then when it was fixed, guess what? It dropped off. Now, what is that? What in the world happened, we'll never know. But I just thought it was crazy, weird, interesting, whatever you want to call it. Glitch, higher, glitch fixed, lower. Now, what happened? Anyway, all right, I'm done with the soapbox. Anyway, so here's the deal. So let's go back to the daily chart, and where are we, okay? Here's where we are. I mean, the market still has a little more upside left. So I've done a calculation, and I do my calculation on the S&P ES contract or the E-mini contract, okay? And it's a simple calculation, all right? 199. So if we get to 199, I would expect a pullback, and if we close above 199, that's very bullish. I don't expect us to close above 199. In fact, very important close on the week tomorrow is 199 on the ES contract. We must close below 199 and I don't care whether we do or we don't, I'm just saying this is what happens. If we close above 199 tomorrow, okay, there's higher prices ahead and possibly much, much higher into the second quarter of next year. As crazy as that sounds, I can say that today if the market closes above there and continues to close above there, right? A one-day wonder is not what I'm talking about. If the market closes below there, I would expect a pullback in the beginning parts of November, maybe up until in and around the election or the latter part of the week, to see a pullback, and then we'll assess to see if we see higher prices or not. And the pullback, would generally be in this area here, okay, which would be about a 382 retrace from low to high, wherever that high becomes, somewhere in this neighborhood. Can't pinpoint it yet until we have a pivot high in, but we don't, so I can't pinpoint it. So that's kind of what I'm thinking. Those are the calculations. And we'll see where the market takes us tomorrow. I would expect us to get to 199 tomorrow in the E-mini contract, and that would coincide with, I'm going to say that would coincide with about, looks to be about, I think 2050 to 2075. I would look to fill this gap here, right here on the SPY at about 2065, give or take. Just call it 2050 to 2075 on the SPY contract. That would coincide with my 199 on the E-mini. So that's where we're looking for upside. I don't have any further indication for higher prices than that right now. So that is my upside limit for tomorrow. Anything could happen, but that's what I see today, what I see now. The markets will unravel tomorrow morning and trade throughout the day, and things could change. But right now, that's the upside limit. We'll see what happens. Let's go over to the oil market before we talk about gold, because gold is more interesting than oil right now. So oil is still hovering above 80, but I think it's going to have one more dip. It just looks to me, usually when you're trying to make a low, not all the time, but in a commodity like oil, you would normally see some kind of power move off of a bottom, and we haven't seen that yet. And to me, it's not definitive, it's not analysis, not technical analysis. This is just things I see. And experience tells me that we have not made a bottom in the price of crude oil. This is the USO contract. So in the price of crude oil, I'm looking for 75. Okay, I'm looking for $75 a barrel. I think we'll see it in November. And if we don't, we'll see higher prices, and that's fine. But I'm not playing it long. I'm not playing it short. There is no pattern to play here. I just see $75 coming, and I've said that before, and we'll see what happens. Unless you can get above this day here, this day's high at 31.92, which in the price of crude would coincide with, I'm going to give you the number, just bear with me. I'm on a different chart, a different screen, a different platform altogether. You're looking at a high in the price of crude, 84.78. So we'll call it 85. Unless you close above or at or above $85 a barrel, I see 75. Let's go to gold. All right. So, oh, by the way, let me look at one more thing for you, because this is interesting. Okay. GDX is the basket of stocks that is the gold miners. Okay. Crushed. Absolutely taken behind the woodshed. Once you came below this low here, which was at 20.11, and you closed below that low, you never closed below it up until yesterday. Once you closed below it, or it looked like it was going to close below it, it started selling, and selling hard continued today. Huge volume today. The volume was 113 million shares. Average daily volume is about 30 million, not even. Okay, huge volume. It could be putting in a low, but not ready to say that yet. You have to see some kind of reversal before you can say low, because right now it's just a falling knife, so you don't want to catch that. The last time we had volume close to that, which was 114 million shares, was this day here, when you had this up move, which was a reversal off this down move here, but it didn't hold. So now you're here, and I want to show you something interesting. I'm going to go to a really long-term chart. Watch this, okay? You have a bottom here that you haven't hit yet, okay, right here, all right? And then you have another one down here. These will be good support, whether they're going to be a low or not, but here's what I can see. If this GDX ETF puts in one more red bar like this, okay, down here, and maybe even reverses within the same month, let's just put it this way. You can be a buyer at 1583 if you get down here. Okay, you close below 1583, you're out. So if you start coming down, if you break, come into 16 and pierce 16, you can try GDX on a long side and have your close below 1583, have your stop out on a close below 1583. That would be a really, really good risk-reward trade. So just be patient and wait for that to come to you. What else do we have? Let's go back to gold. So gold, the price of gold right now is $1201.50, but this is Wednesday night. Gold was down to I don't know, 11.95 today, I believe. And basically, the GLD, you're in trouble here. This may have one or two more down days, but if it doesn't bounce, then you're going to go lower. So my calculation that I have in the price of gold, okay, not GLD, I did a calculation in the price of gold, and I worked out my downside is going to be 1189 to 1190, but it could go lower, but I would think that would be good support. If we go considerably lower on a break below 1189, then I don't have the number for you. It's probably 1150, then 1130. But if you're going to bounce, you have to bounce off 1189, and you have to bounce quickly off 1189. So that's what I'm seeing in the gold market. Anything else out here? A couple of stocks reported after hours. Starbucks was down. Let's see if it's still down here. I'm on a different platform looking at it. Yeah, down 274 after hours. LinkedIn was up. Okay, LinkedIn was up after hours. Yeah, I don't have the after hours quote on this one. Let me get it on the other screen. LinkedIn was up $10 after hours. First it was down, then it was up. Let me see what we've got here. Not that anybody cares, but some people trade LinkedIn. LinkedIn's a good stock to trade. Yeah, LinkedIn went down all the way to like 180, and now it's up at 210. That's ridiculous. That's crazy stuff. So that's about it, folks. I think I covered everything that should set you up for tomorrow. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.